Hello and welcome back to another video. In today's video I'm just going to be sharing with you how I managed to take advantage of this swing trade on EURUSD as a result of market participants trading action. So first things first, let's actually start on our monthly time frame and just show how I actually constructed my bias to the downside in the first place. So as you can see, in some of our previous months we've actually traded down our monthly fair value gap, and from here this is when we've actually seen price start to make a run to the upside. From now dropping onto the weekly candles, you can actually see that in our week previous to our previous week, what a huge run up to the upside, actually creating our large weekly fair value gap. Okay, where more likely than not market participants are going to trade price back into it on a weekly candle level. As you can also see on our monthly time frame as well, you can actually see that we're trading inside our monthly fair value gap. So when we actually have traded into our monthly fair value gap, left such a significant size level of liquidity, where more likely than not market participants are going to push price towards it, and it's going to act as a magnet for price. This is when more likely than not we are going to see some sort of retracement. So dropping down onto the daily level, let's actually review how the week actually went. We can see on Monday, we actually just traded within our previous week's range. This candle, yeah. And we can see it wasn't until Tuesday where we actually managed to sweep some of our buy side liquidity, being at our significant levels such as our previous weekly high. Now, from this point, and while using your economic calendar, this is where you want to be anticipating some sort of retracement to the downside. Now, what the anticipation actually does is get you ready and, prepared to actually take advantage of a potential trade. But it's going to be actually very important to identify what a likely profile is likely going to be. So if we've traded up in our previous week here, got this massive inefficient leg, tapped into our monthly fair value gap, more likely than not, from a weekly level, we are going to see some sort of retracement back into our weekly fair value gap. Exactly what we have actually seen. Dropping down our time frames again, showing my actual execution, you can see what I was actually waiting for is our significant level of displacement. Now we actually got this with our news driver Wednesday. See, so here, then we can see as soon as we got that 2-hour close and aligning our 130 move, where more likely not market participants are going to trade price back into efficient leg in the opposite direction, creating some sort of manipulation. This is where I'll be looking to execute. With saying this as well, what you also want to be actually looking for is, before you actually take a trade, is the high of the week more likely than not going to be in. Same thing goes, if you're actually anticipating some sort of retracement back into our weekly fair value gap, and we've seen, some displacement, more likely than not, okay, using probability, the high of the week is going to be in. And you can see, drop frequency by not actually taking any trades to the upside, as price could have quite simply, market participants could have made a run straight below without actually our buy side liquidity. So it's important just to, always look and scope out when more likely than not we are going to see this weekly expansion on our daily level, which is got on Thursday. Aligned perfectly with our execution, timing, and trading around the economic calendar. You can see as well, we actually managed to perfectly tap into our weekly fair value gap. This is where we look to actually take profits. You see, tap below, price started to trade back up. This is where I actually managed to get out of position. Now, very, very similar, the dollar index as well. See that we are traded into our monthly fair value gap. we actually swept some of our sell side liquidity on our daily time frame, being our low, and this is on the 4-hour. Seen our displacement to the upside, candle above, seen our retracement back into this displacement leg into our OTE respecting, and this is where we'll be anticipating some sort of expansion, obviously being in line with USD and GU, depending on what the more favourable pair is on that trading day. So that was the trade review. Now just going into next week's outlook, what I'm actually anticipating is market participants to trade price back above our high here into our daily fair value gap. Now from this, I'm actually anticipating our high of the week to be made quite early on, potentially Tuesday, with when some of our news drivers can play, but obviously I'll update that in the Telegram as we actually go on. And then very, very similar, just the opposite, and looking for some sort of confirmation to the downside from this overall leg, and the opposite, what we've seen, this opposite retracement, very, very similar. Make high of the week early, and then look for the displacement, be patient, and then if our parameters and market participants have shown to actually intended to push prices lower, and our market structure, profiles, and overall foundation of price is presented nicely, then I'll be looking to get into a trade to the downside, where our retracement low acts as our internal range high probable draw on liquidity. Now, if and when we actually delve past our internal range liquidity, and we actually show signs to push prices lower, we actually displace our low here, this is where we could potentially see our the last few days of our weekly candle. This is where we could potentially see a run all the way into our weekly fair value gap. But overall, I will update this in the Telegram as we go on. Thank you very much for listening if you have made it this far.